folks. Welcome to the Daily Coin. My name is Rory, and I have on the line the silver guru himself, Mr. David Morgan. How you doing, David?
Doing well, thank you, Rory.
And I'd like to just welcome you home. I know you've been at a seminar. Right now, David, what is on my mind, Greenspan and his recent comments about gold, currencies, what he sees as the central bank's role as far as holding gold. Give me your take on what he said as far as the one thing that really got my attention, and I actually wrote an article around this, was his, and this is a direct quote, intrinsic currencies like gold and silver are acceptable without a third-party guarantee. Now, he's actually saying that gold and silver are currency. And most people at his level don't talk about gold, and especially silver, as being currency. And why do you think that he would come out and say this at this time?
Why he's saying it at this time, I think that it has to do with being much more honest about the financial conditions of the global economy, and specifically the U.S. dollar's place in the global economy.
Okay.
I think he's much more truthful than he's been in the past when he was Fed chairman. I also think he's a bit disingenuous. I mean, what he was known as is a disciple of Ayn Rand, and certainly wrote the treatise on gold in, I think, 1966.
Yep.
And then Larry Parks did a book, and I have it on my bookshelf, about understanding what Greenspan is really saying during his tenure at the Federal Reserve. And Larry made some pretty good points. In other words, that Greenspan is really, truly a gold bug. He does understand honest money, and that what he says, you have to kind of read between the lines to get the meaning of it. I don't want to obfuscate this situation. The way I see it is slightly different. I see it that he was a gold bug, and then he made the excuse during several of these interviews, and one particular down in the New Orleans conference, that he doesn't have so much power as the Federal Reserve chairman. He basically is directed by Congress, and it's basically a political position. And therefore, he just kind of went along with the political pressures at hand. And now that he's out of the Fed, he can speak his mind, and he's much more strident about the place of gold in the monetary system. So to me, I think he loses integrity with that statement, because really, he's copying out in a way, saying that, well, the political pressure, I couldn't do anything else. And the fact is, he could have, certainly would have caused a lot of interesting situations for the Fed and the monetary system and everything else. Certainly wouldn't have been easy, but I think it's a bit wishy-washy to say, I'm pro-gold, I'm letting Congress and the political pressures dictate what I do, and now I'm pro-gold again.
Well, see, and that's that statement where he's talking about he's taking orders from Congress. That's nothing could be further from the truth, from what I can understand.
That's right. It's purportedly an independent body. Now, we all know that there's a lot of political pressures on the Fed. I mean, that's a fact. But it's a private corporation. It's a private corporation. That's what it is. So political pressures being what they are, they don't answer to Congress. That's a fact.
Right. I mean, they don't answer to anyone. I mean, at all. And
that's right.
We can't even investigate. We can't, audit their books. We can't do any of these things. And for him to hide behind that veil, that lie, I mean, that's a lie, any way you put it. And
if I could just interject here, Rory, real quick. Remember when Bernanke took over, and there was a congressional hearing, which there are many, or updates that the Fed goes into the chambers and they speak. And there was one about the bailouts, and one of the, I don't know if it was a congressman or senator asked him, or some committee. But anyway, they asked him, can you tell us where all this money went and how much of it, was involved? And he said, no.
Yep.
I mean, like, we don't answer to you guys.
Right.
And the answer was no. Remember that?
I do. I remember it quite well. Which is, once again, it's ridiculous. But it's a fact. They don't answer to him, and he's telling them flat out, "I'm not going to answer your question." And he was talking to Bernie Sanders out
That's
of
right.
Vermont, and he told him flat out, "No, just and that's it." So Bix Weir, I don't know if you follow his work or not, but I know that Sean has interviewed him on many occasions, and he recently um, interviewed Bix about what's going on with the situation and some of the comments that Greenspan made recently. And Bix Weir's always said that Greenspan is a gold bug, and he's one of the good guys as far as the coming collapse, or the unfolding, I should say, the unfolding collapse that we're in the middle of. And the comments themselves were made in the chambers of the Council on Foreign Relations. And I have to believe that those words were approved for public consumption, be it a small piece of the public, but still, I don't think that those words would have ever gotten out without somebody above him within the Council for Foreign Relations or Council on Foreign Relations approving that to be out in the public domain. I don't think that it would have ever made it without somebody saying, yeah, it's okay. Or am I just way off in the weeds and conspiracy
No,
theories?
if I had a better answer, I'd give it to you, Roy. I don't. I mean, it's a mystery to me. It's like a big tug of war going. You've got, central banks globally with this huge power structure that they're trying to protect the paper paradigm.
Mm-hmm.
And then the CFR is definitely involved in that at a pretty high level.
Yes.
And then Greenspan makes a speech there. And it's very clear that he's signaling strongly that gold and silver is where it's at. So I don't know if it's a foretaste of the paper paradigm, unraveling further, which it will, or exactly what. I wish I had a great answer for you. I really don't.
And he went on to say, also in the same speech, he said, quote, "Why did central banks put money into an asset which has no rate of return, but costs of storage and insurance and everything else like that? Why are they doing that? If you look at the data, with very few exceptions, all of the developed countries have gold reserves. Why?" And that is a huge couple of questions that he's asking.
Well, that one I could take as a rhetorical question. I mean, basically, because mankind has voted that gold is money, and it's voted that way for thousands of years. It's not always in the monetary system, but it's been coveted throughout history as the final means of payment. And of course, you get the argument that anything could be money. It was salt, it was cattle, it was, this or that. And those are facts. I don't deny it. But the premier of premier, the one that's lasted and the one that's most voted on the most diligently, is the gold. And gold is money. And so the reason that it does what you described is because everyone knows it's worked for thousands of years. Where on the fiat system, every one of them has failed. And so you have a pretty good track record of which one stands the test of time. And if a bank is all about money, not currency, then that means that they have to have it. And that's why, as you said, every major central bank of a developed nation has gold. Because whether they know it consciously, they know it unconsciously. Because it's the most important financial asset in existence. And it's been that way for hundreds upon thousands of years. Which means that it is going to have some place in the financial future at some point. Even if it's just temporary, it will have a place. Take it as something that you can almost, go to the bank on, excuse the pun. But these bankers, some know it, some don't. The powers that be certainly do know it. They just want to maintain control. So they'll keep their paper paradigm going as long as possible. And I think that their plan and their hubris is enough that they will believe that they can drill the dollar down at will. In other words, they have complete control all the way down, which I disagree with. I think markets have a mind of their own, and it could get out from under their control.
Do you think that there's been a lot of talk recently about the SDR, the special drawing rights that are controlled by the IMF. And do you think that there's going to be a shift to that as far as to be able to continue this fiat currency Ponzi, or do you think that the Chinese and the Russian governments, do you think that those two entities are going to completely break away from all of it and back everything with gold?
That's an excellent question, and I'll give you my opinion, and there's probably better studied people than me on it. I mean, there's two schools of thought on it. One is that the banking system is so powerful that the Russian China versus the Anglo-American empire is just for show, and it's part of the major plan that Russia's already said. They think the IMF idea is pretty good, and so that is the possibility. Certainly, Jim Rickards has made comments about, the next bailout will be through the SDR, special drawing rights from the IMF. And I honestly don't know. I would like to believe that that the bankers don't hold absolute, complete power over the entire globe, which, you could say that they do, and that there really is a faction in the Russia, China, BRICS countries that do want to break away. But I'm not so sure that's the case. I really don't know. I mean, the evidence actually shows that, one, if I could back up and give the big picture, I don't care what stripe you are, meaning if you're communist, fascist, libertarian, Anglo, or anarcho-capitalist, or you name whatever label you think you are. Everybody depends on a monetary system. Isn't that interesting?
Yes.
You could be the biggest communist out there, or fascist, or whatever. You still have a monetary system. And so that is what the real power comes from. And how it's used may differ in different modalities. But nonetheless, that's where the power is. That's where the control is. And so it would be difficult for China and Russia to break completely free from the existing power structure and maintain a monetary system where they could maintain power and control. I'm not saying it couldn't be done, but I think upon reflection, it's more likely that what we're seeing is more of political moves that are more or less orchestrated. I hate to say it because I like to think that there's some semblance of free will out there for us, but I would lean toward the idea that more of it is more for show than go. It's really more of an act than not. But it could be the other way. I really don't know.
Well, see, and I've thought that for a long time, that Obama, Putin, Xi out of China, I've long believed that they're all working from the same playbook. They have their different roles to play, and, there are different scenes that they act in, but it's still just a show, and that they're all, like I said, working from the same playbook, and it has nothing to do with the dollar or the yuan, that it's all just one big criminal act on a global scale. I mean, and
Well, it makes it easy to use the SDR because that's a basket of currencies, and then eventually they just withdraw all the currencies, and it's just the SDR, and they rename it or whatever, and then that's your one world currency. So there you go. So it's logical that it is the next step to a one world currency, certainly. And I do lean that way, by the way. I mean, I think that there's a possibility that I've got it wrong, but that's probably the way it is.
Well, and the only other possibility would be for, like in my question, are Russia and China gonna back out completely and just say, look, we've got all the gold, you know it, we're gonna release the combination yuan ruble, and that's gonna be the currency that we're gonna operate in. It's gonna be backed in gold. If you want to do business with us, you have two options. You can use our currency or you can use gold. That's it. And that's the only two possible scenarios that it could be. I mean, they do have all the gold, and the golden rule still applies. Or, once again, am I just completely off in left field somewhere?
Oh, no, I don't think you are. I mean, there's probably more than those two possibilities. But I think, to break it down, that's, the two most likely. I was getting, near the end. I mean, with Greenspan making the speech, as we talked about earlier, with what is going on politically, orchestrated or not, it's obvious that we're getting closer and closer to the, final quarter of the football game as an analogy, and things are getting quite interesting. And the game certainly hasn't ended yet. So we're all on the edge of our seat because it's getting to be rather precarious with all this taking place.
Well, the U.S. Mint sold out completely of the Silver Eagles, the premier silver coin in the world. Completely sold out. They're supposed to be coming back online somewhere around the 17th, I believe. You've got what you and I have just been discussing, and then this happens right in the middle of it, right in the middle of Greenspan's, comments really making their rounds through the alternative media, and then the mint sells out. What are your thoughts on the shortage of silver, the mining industry? What's going on there from your perspective, David?
Well, I'm a top-down analyst, so I look at it from the top. And from the top, you got to look at the silver market. And the silver market is your 999 fine Comex good delivery bars. That's basically what it is. So all of your retail product, if they're minted from the U.S. government or they're minted from the Canadian government or they come out of Australia or out of Europe or wherever, they all start out as a big clump of silver. And then they have different methods. I've been through the Sunshine Mint, which is where a lot of the blanks for the Silver Eagles are produced. I've been through that twice, in fact. So we're not at a silver shortage yet. So we do not have a shortage of commercial grade bars. What we do have a shortage of is Silver Eagles. And that's because silver investors are pretty smart and they see a price where it's very, very low. So they scooped them up, and the demand was so high that the mint couldn't fulfill it. And the mint, of course, has been increasing their production rate over the last few years because for better than a decade, the annual takeoff of silver was about 10 million ounces a year. Now we're up to about 40 million ounces a year just in Silver Eagles. That's a fourfold increase, obviously. And 2 million ounces scooped up definitely put the hurt on them because that was probably unplanned for. They look at a median rate, and the rate went up very strong because of the price. So it certainly shows a couple things. One, that silver demand in the retail market has been uptrending for the last several years, that silver investors are very smart when they should be buying, and that the mint probably got a bit of a wake-up call, but they're not going to react that quickly. They're going to just mint what they can and allocate as they see fit, and there'll be a quote-unquote shortage of Eagles probably for a while longer.
Okay. What do you think about Mr. Neumeyer comments about calling for a silver cartel?
Well, Keith and I go back several years. I've been with him at different conferences through the years, and we had First Majestic on our list for many years at $4, and believe it or not, of course, we're not a lot higher than that now. I shouldn't laugh; it's not funny, but it was under $4 for quite some time. And I said, this company's fundamentals are very good, and it's worth a lot more than that. Of course, it's been as high as, I don't know what, I look at the chart, 25 or something. But I like his idea. I think you got to be a little careful. It seems that the political system is pretty skewed. I mean, you have to be politically correct and all that. I mean, when you call for a cartel, and I don't know if you use that word, I did watch it real quickly, but the manipulation thing always comes into the conversation. And the manipulation does work both ways. You can manipulate any market up and down. That's true. What's going on now is certainly has a great deal to do with two things. One is there's a great deal of paper selling, and the other one has to do with there's a great deal of physical buying. At least that's the appearance, the mint being a case in point. And whenever a dealer sells silver, that's a worthwhile dealer, meaning a big, going concern. I'm not talking about a small mom and pop coin shop somewhere. I'm talking about, the Mike Maloney's of the world, or, some of these larger, Miles Franklins of the world. I'm talking about, major entities that sell a great quantity of gold and silver, year over year. When they make a sale, they have to go in and hedge it. So if I buy a monster box of Eagles at a set price, they go into the futures market and make a sale. And the reason they do that is some people, if the price goes down, don't send their check. And so they've got a loss on their hands if the check doesn't come through. And people do that. People are people. So they're in the margin business. They get the spread between what they pay for it and what they sell it for. And that's very much the case. I mean, I want to back up a little bit, Rory, and just explain that, the reason you pay more for a silver coin or a silver bar, I'm talking retail market now, it's like a silver round or a silver eagle or a 5-ounce bar, 10-ounce bar, even a 100-ounce bar, is that there is transportation costs and manufacturing costs to get that 1,000-ounce bar into another form. To think that you're buying silver at the spot price on the COMEX is ridiculous. It's like assuming you could buy a loaf of bread for the wheat price that's on the COMEX. You can't. Wheat has to be, manufactured into bread, just like the COMEX 1,000-ounce bar has to be manufactured into a coin or a smaller bar. So that's the reason that you can't buy it. Now, you could buy a 1,000-ounce bar for a very slight markup. You could buy it for the spot price, and there's some other fees that go along with it. But I wanted to make that point clear. But coming back, so these people are hedging in the futures market. Now, once the transaction's clear, that hedge should be removed. So that doesn't put a lot of downward pressure on the price of silver. It does put some, but most of those transactions are very temporary. It's just for like a week or so. However, some of these dealers, when they have that position where they've sold to hedge because someone bought X amount of silver and they sold against it so that they're neutral, so that they capture their 4 or 5%, whatever it is, and the market continues to go down. Well, now they decide to keep holding that position. So there's a little bit of that going on as well. But overall, I don't want to make a big thing out of that. I just want to point it out. Most people never think about that part of the market. But overall, it has to do with a lot of these hedge funds, trading funds, I should say, that are short the market. And they have a huge amount of profit on paper, but it's only on paper. It's until they close their position is when you do the tallying. It's like having all the chips in the center of a table in a poker game. If somebody thinks that they're going to win, but it isn't over till the game's over. So once this market turns, these trading funds may be in more trouble than they think because they have huge positions that have to be covered. And once the buying starts, the buying can start really quickly and in massive amounts. And all of a sudden, if they're short at 17 and silver makes it to 17 in a few contracts, everything they've sold short from 17 down, they're underwater on. And that's going to be more pressure for them to get out of their position. So I think it's at an extreme now. I don't know what it's going to do between now and the end of the year. I think we're probably going to get a brief rally. I do know from experience that we've seen these metals get hammered into the final trading day of the year. And that was never the case. I've been in this market for, I should say never, because it's happened in the last few years, but you never saw that up until the last few years. I've been in this market 40 years. You used to always see kind of a year-end rally in the metals. You could almost bank on it. But that has not been the case. So I expect this year we might get a relief rally here, Rory, for a little while. And then probably as the trading gets slower and slower and less, it's easy to move a small market, especially one that's not very active. So I would see some selling. And unless we have tax loss selling coming up too, a lot of people are going to be selling at a loss and holding to 30 days or whatever it is, and then moving back into their position. So it doesn't look real bright. They can't make a real strong case for things exploding from here. It could. I don't see it. I see a lot of tax loss selling, a brief rally perhaps, and then more selling at the end of the year. But we'll have to wait and see.
I was talking to Eric Dubin a week or so ago, and he thinks that 2015 is going to be a pretty big year for gold and silver, and he actually is calling for mid-20s on silver mid $20 range. And I'm not asking for any predictions, but do you see 2015? There seems to be a lot of people saying that 2015 is going to be a pretty significant year as
Well,
far as
absolutely. Yeah, I go along with that. I mean,
okay,
I don't do cycle work. There's a few people that do, and Mike Maloney's one. This Bo Polney does it.
yeah,
But I look at a lot of stuff. I still do my own work, but we're due. I mean, we're past due, really, as far as
yes,
time goes, because most of these kind of washout bottoms that we've seen are about 3 years, and we've been longer than that in the silver market. We've been longer than that in the gold market. On top of that, we have what's called a spike low, but I don't want to make a big deal out of it because I don't know yet. I don't have enough data. We need more trading in the future. But everything from my experience looks like the bottom is either here or within a few months, I say at the most.
okay,
I think 2015 will be, a year where it's coming up. I mean, as poor as it sounds, if we get to $25 silver, that's a lot better than the almost 15 that we hit a few days ago.
yes.
So,
I mean, we're only in the
if
mid 15s.
there was a perfect world, and everything was on the up and up, $30, $40 silver, wouldn't be a bad thing for the miners and everything else. They'd be able to make a decent profit, that type of thing. But $15, $16 silver is ridiculous. I expect to see much, much higher prices. I mean, I have it in writing, so I can't take it back, nor do I want to take it back. I truly believe when things unravel further that the rush to silver and gold is going to be so spectacular that the value of them will exceed what their historic values has been by a great margin, in fact. And I think that day is probably not that far away. It could be 2016, 2017, something like that.
Wow. Okay. So you think people should be backing up the truck at this point with the prices where they're at?
Yeah, I do. I still been very conservative, all the way along. I mean, the 10 rules of silver investing that I wrote so many years ago still applies for most people. Market timing's tough. It's a skill and there's ways to do it, but no one gets it right all the time. I don't care what guru you listen to, yours truly included. Jim Sinclair got the top in gold. I know that for a fact. Harry Brown got pretty close to the top in silver, and that was one of the guys that worked for him actually kind of mentioned to Harry he thought it was high enough. It's probably time to exit. But the bottoms are a little tougher for me. I've been good at calling the tops, but regardless, the best thing is a dollar cost average. If you think 15 is cheap, but it could go to 12, which I doubt, but it could. I'm not going to say it can't. What you do is you take the amount you want to invest and you spread it out over the next 6 months or so.
Yep.
And if it goes from 15 to 20, you can buy it on the way up or you can buy it on the way down. The idea is a dollar cost average or put it in. If you are happy with 15 and think ahead that, if it gets to 12 and it's still at 15 a year from now and you can live with that decision, then certainly you could do that as well. You could back up the truck and load it up and take off, but you really got to know yourself. Something about investing I learned pretty early on is that it'll expose a lot of the foibles in your own personality. So a lot of speculators become investors because they know they've got a sure thing this thing's going to take off and it's going to happen right now. That's a speculator. Speculator makes an investment, and it should be a small one, knowing or think that they know that something's going to take off one direction or the other in a very short amount of time. A lot of people think that about silver or gold or anything. And when that doesn't happen, well, then they have their position. So rather than admit they're wrong on their speculation, they'll hold on to the same investment and say, well, I'm just holding it for the long term. And there's a lot of people holding, on to silver from the $30 level. Believe me, $30 silver, I bought some $30 silver. I mean, I bought some at 25, I bought some at 20, and I'm getting ready to buy some now well under 20. So I pretty much practice what I preach, meaning that I don't put it all in at once. I do speculate somewhat, but not very often. And now I think is definitely a good time. Is this it or not? Don't know.
Yeah, I don't either. That's why I actually got in the mid 30s. So I was around 34, I think was my first purchase on silver. and I've been dollar cost averaging it down, and I've actually been able to knock off right at $10 an ounce. So I'm pretty happy with it. Not pretty happy. I'm very happy. I'm ecstatic over the fact that I have something that is called precious. It's called precious for a reason. I'm not gonna let it go anytime soon. So I'm probably not ever gonna let it go actually, unless that's where our economy winds up, that gold and silver become currency. Then I'll use it, you know. Or if I find a situation where I need to make a large deal on land or automobile or something like that, a large purchase, and the person's willing to trade gold or silver for it, then do it that way. But I'm not gonna. It's not gonna go back into the market. It's not going. Oh, it will. My coin dealer will never see it again. So, oh well, David, we're about a half hour into this, and I don't want to take up any more of your time. I would really appreciate you spending a few minutes with me this morning, especially since you're just getting back from your from the seminar.